Evening, everyone. It's Chris from Solstice as well as Excel. You can find us on both websites, X, Instagram, as well as Discord. And remember, the YouTube video is on weekly basis for free for everyone. You can check it out. Give us your commentary. Let us know what we can do to help you out. And we are not a broker dealer. Our past performance doesn't give us any indication of future results trading equities, options, commodities, and so on. This is for educational use. And once again, check us out at Solstice .axelatrai.com. Let's go to the first website. This is the website where you can find us so you never trade on your own. You need assistance and help. Let us know how we can help you. This is for retail and this is for institutions. So remember where you can find us on both websites. Let's go to the first slide that I have up here, and I put the New York Composite. As you can see, I do not have any moving averages or anything on the charts other than the annual, vertical line, which shows you the 2025 historical. I put 9 month out there, and I put the highs in February and falling back to that consolidation where we broke out of after 3-4 months from the August-September rally. Then we had the November push up in 2025, the January low, rally up, and we came back down. And we kind of did a double bottom. If there's going to be continuation, we got to pay attention to the RSI divergence or the momentum indicators such as the MACD or the stochastic. If there's going to be a clearance to F3, F5, and F6, which is the 61.8 fib, that's 100%. That's the zero line. There's a 23% here, and there's a 78% right up in this area. Remember, we were consolidating for a while here. We rallied up and we fell back down. We came back to that breakout. You can see we filled this gap right here on the charts where you can see these two candle double bottom. We filled it and rallied up. If there's going to be continuation, we have to pay attention to the Iran-Iraq war. The Iran-Middle East war between U.S., Israel, and Iran. Because if we come back down and retest 50% of that move, that would be great if we hold this area. If not, and we fall back through, we got to look for the extensions to the downside and the backside of the candles. And the backside of these candles down here where we got the breakout in this consolidation before the rally up. We retested this area. So is it possible we can come down here? Yes. But if there's a momentum indicator in the RSI saying there's a reversal and we're going to continue above the 38.2 to the 1561, pay attention to them. I am not using the 50 SMA or the 18 SMA, which will show you we are trying to reverse back up because there's a change in the trend in the fast time frame on the New York Composite. Let's take a look at the XLK in the tech sector. And you can see in the XLK tech sector, we had a nice push on Tuesday. This was the Wednesday. This is the Thursday candle. When we came back down, we came back halfway through that candle, found support. If there was more bearishness to it, we would have broke this consolidation because we came back to that 50% of that candle as well as the breakout and the consolidation on this left side, and we rallied up. And on Friday we had, due to the Middle East and Iran and Israel as well as American hitting Iran, we fell back down due to crude oil. We have to pay attention to the Federal Reserve Board interest rates, crude oil, as well as inflation right there. If there's going to be continuation and we end up losing the 23.6, what I'm going to do is show you how to draw the Fibonacci, showing you 100% of that move up here all the way down to here. You can see where the 23% has to hold. If not, the 14.62 has to hold here. If not, we continue lower to the bottom end, which is the 23. There's a 14 here. There's a 38. I do not have the 50 right here in the middle. I have the minus 61.8 and vice versa to the other side on XLK. Let's take a look at right now the SPY. I do have the Fibonacci's on the SPY. You can see the weekly measured move from the highs and lows for the week and the 50%. If there's going to be continuation, we do not want to lose the Federal Reserve Board interest rate or the tariff noise. When we came back out of it and we broke out, we kind of created a head and shoulder, fell back down. We are in that downtrend. If there's going to be continuation, we have to pay to the F3%, which is a 38.2 in order to continue to F5, which is the 50%, and eventually to the 61.8. If there's not going to be continuation to the upside, we have to pay attention to the 50% and the 38 to hold. If not, we look for the backside of the zero line and the breakout down in this area, which will end up coming back to the 23 and 38. There's a 14.6% right here on the SPY. Let's take a look at the QQQ. This is the QQQ. And you can see in the QQQ, all I did is the measurements, and I showed you the backside of the downtrend channel. And the one down here, you can see that we are in a downtrend. And even if I draw a channel from here instead of a Fibonacci, I'll show you how to do this. We can grab this line here to this trend here. We can see we are in that downtrend linear regression downtrend channel. In order to break out, we have to make sure we can clear the interest rate as well as the tariff. In order, there's going to be continuation back to F5 and F6. If not, we'll look for the backside of the 61, the 50, and the 38.2 to hold. If it does not hold and we break through, we'll look for the back end of the consolidation and the retracement of that measured move down to the point of control. So that's on QQQ. Let's take a look at IWM, which is in the small cap. It looks much better. I do have the monthly measured move on it, as well as, the measured Fibonacci for the monthly monkey bars from the prior month high and low. And at the same time, I got the weekly, because you can see there was a lot of consolidation here. The breakout coming back to this area, we looked under it and we reversed back up. If there's things going to change in the small cap, we have to pay attention to small cap if they're going to hold the backside of this channel and the 38.2 and the value area low in order to continue higher to clear the F3 and F6. If not, we fall back into the 23% and eventually the zero line. So what we're going to do, go to the style in here. We're going to go to the monkey bars. In the monkey bars, they're going to show you the 30-minute, 10-day historical. This is on daily basis. This was the IWM on Thursday. So what we're going to do, go to the time frame here, go to time frame. We're going to go daily on here. We're going to show you the 3-month daily, which will give you an overall view on each month's the highs, the lows, the value area low, the value area high, and the point of control. You can see in the prior month, which was the March, we have this high here, we have this low, and the 50%. The 50% is higher than the time spent here. So the sentiment should be bearish, but we are close enough. There's going to be continuation. We have to clear the 50 and the 61.8 to get to the 78%. And you can see where I have a value, a level area down here. And what I did, I marked the value area high, mark the value area low, and the point of control for the IWM. In order for IWM to clear, we need to make sure we can clear the 57.50 to 58 area in order for the momentum to shift back up. If we end up losing the 248 and the 244, pay attention, we end up falling back in to that range in IWM. And I wanted to use this on the monkey bars to show you how to look at it. And if you want to change the time frame for 30-minute, 10 days, this will give you the overall profile where the high is, where the low is, and the time spent in relationship on each instrument. Let's go to the style. We're going to go back from monkey bars to standard. You can see where the IWM is. I'm going to show you the Magnificent 7, including Netflix here. I have added Apple, Amazon, Google A, and Google L, which is the Alphabet, Meta, and Microsoft, NVIDIA, and Tesla, but I included Netflix in there to show you that we were in large consolidation up here. We eventually couldn't hold it. We broke through that area of consolidation here. You can see it here. If we consider this is the rounded, this is the shoulder, this is the shoulder. There was a lot of consolidation in this area before the breakout. And up here you have another market profile where there's a lot of volume. Have it. That's considered supply. In order to continue, you have to, in order to clear the 100%, in order to run up, you got to get back to the 150 area. If not, and get back in that consolidation, it's going to find a little bit of resistance up here. If we cannot clear that 50%, we can come back down. And if there's going to be continuation to the downside, we have to pay attention to inflation and crude oil to come back down. Let's take a look at now the VIX, and we're going to talk about crude. I'm going to show you the VIX here. And what I did on the daily is show you every time we have a spike up in the VIX, we retrace back down. We have a spike up, we retrace back down. This was due to the Iran, the February 28 push up. We rallied up. We came back in the last 4 days. You can see that the VIX sold off. We have to pay attention if we are going to end up losing that $22 range, coming back to 18. If there's going to be fear in the market due to the Middle East and the crude oil, we got to pay attention, as well as inflation. Then we'll have a spike back up. Pay attention to that 28 area if it's going to clear in order to run back up. And I'll show you this on a 10-year history. Every time we have a push up, we've been coming back. Instead of the daily, we're going to go to a 10-year. We're going to use a weekly. So you can see that from 2018, 2017, and 18 and 2020, the COVID, you can see those large spikes and eventually the dump. And this was in December. This happened in April 2025 when we spiked up, came back down. I mean, this was the 2020. I'm sorry, this was the 2023 spike up, coming back down, and this was the April spike up, coming back down. I am paying attention to that 28 and 22 area in case we end up falling back in the range and things are going to be settling in the Middle East. If there's negotiation between the Trump administration as well as Iran to solve the issues over there, and they let oil go through that Gulf and the Red Sea. So let's see what we can do. And this is on the daily basis. We're going to go back to the daily, take it day by day. We're going to look at the micros, fundamentals. Then the technical is very important. Since we are traders, we look at technicals instead of most people looking at it on swing trading. You don't want to be positioned on the wrong side unless the technicals tell you in the RSI or the MACD or the stochastic, the ones that we use in order to help you continue higher. So let's take a look at now TNX. This is the interest rate, bonds. You can see there was a spike up since the February 28, the rally. Then we came back in. We can take a look at TBT. Oops. TBT. And you can see it's vice versa, the rally up in interest rates coming back down. So we have to pay attention to that, as well as the VIX. Let's take a look at crude oil, micro CL. And micro CL. I'm using the micro CL. You can see the rally up here on that large spike. We came back to the 85 area, 80 area, and we rallied back up. Usually, I think crude oil will eventually settle for a while between the 85 and the 80 area. I know we are spiking up. Let's see what they're going to do as well as Brent. You can do ZB. Hold on. Brent B. No, I don't remember the symbol on Brent, so it is okay not to have it up there. But if I really gonna use Brent oil, BT, no, that's BTC. Right, there it is. There's the Brent. There it is. So we had the spike twice, double top, fall back down, come back up. So we got to pay attention if we end up losing the 96, coming back to the 86, 88 area in Brent. So let's take a look at now Apple. I want to show you Apple, that it is setting up on the daily nicely. You can see that move up. That's the shoulder. That's the head. That's the shoulder. We are in a wedge. We're trying to climb up. I am paying attention to that W formation here. If there's going to be continuation in the market, it's going to be okay. If we end up holding 50% of this candle from high to low, I'm expecting 1.5% back up. So if I'm going to measure this, I'll show you how to do this. You can take the low to this high. You can see it's a 3.3. So if I'm going to get this move, it's going to be up in this territory. And if we end up falling, then you look from this area here back down to down here on the backside in Apple. Let's take a look at the AMD. And you can see AMD is doing the same thing, but I am paying attention to that large consolidation. You can see there was a lot of consolidation here. The rally, the double top or triple top fallback and the gap. You can see on the earning it fell down. It's consolidating nicely. But if there's going to be a breakout in this area, so what you want to look for is in this area that if we clear this is where the supply is. You'll end up, filling a partial of that gap because this was a lot of consolidation here, the rally, and you have this area here. So if I activate it, I can grab it and push it down in this territory. If I clear this area, I'm looking to fill partial gap to the upside in AMD. You can look at Rocket Lab, RKLB. You can see in Rocket Lab, we were in an uptrend for a while. We fell back down since the January highs. We had this in March. That was the high. We fell back in. We tried to rally. I am paying attention to the RSI divergence if there's going to be clearance in this area, because if there is, I can draw an uptrend channel from here to here. So I can show you how to do this so we can do this together. This is the uptrend channel. We do have that downtrend channel from here. In case I do clear this, I'm expecting the move from here to duplicate to the top back to this area here. So you can see how to look at it. You can use either boxes. I'll show you how to do a box. So the distance you travel from here to here, you can duplicate it on the breakout. And that's the expected move from the breakout back to this area in case there's going to be momentum in Rocket Lab due to Tesla. SpaceX is coming out, so it's going to give it a little bit of a push in Rocket Lab. So you can kind of get an overall view what we are looking at on Rocket Lab or UFO. I'll show you UFO. Similar situation, you can see it's in the same space, and you can see that triple top. If there's going to be continuation, if we fall back in to this territory here and find support on creating a top, if there's not going to be continuation, that's another way to look at Rocket Lab. You can take a look at right now PLTR. I'm going through a lot of stuff here. In order for Palantir to clear, you can see that this consolidation here, the rally, come back, retest this area is very important in order to clear, in order to get back to that supply area. If it doesn't, it falls back in. If there's going to be momentum, I'm looking to fill this partial gap up here in Palantir. Let's take a look at now the measured move on the micro ES, and you can see in the micro ES I did the measurements from low to high, and I showed you the extensions to the upside and the extensions to the downside, and I can show you how to do this again. I'm going to delete it, remove the drawing. I'm going to go to the measured move. It's right at the bottom. I did add the extensions to the top and bottom. You can see the colors are different. I can edit the property. I'll show you where they are. From 0 to minus 100, from 0 to 100, 100 to 200, and I change the color on the weekly to make it baby blue or Zion. It'll help you understand where the levels are for the weekly, if there's going to be a push up or a push down on the micro ES. Let's do that on the micro NQ. And what I wanted to do here in the micro NQ, you can see the uptrend channel. I did this downtrend channel here. I did this downtrend channel. We kind of come back to that the interest rate as well as the tariff, the rally up, that double top. It created a crab, and we got a lot of here, a lot of congestion in this area, which is considered supply. In order for us to run back up, we need to get back to F5 and F6 in order to find some kind of support in the market. If not, and we end up losing the Wednesday's candle, that candle that looked below and rallied up. If we are not, because this has single print, and what I want to do is show you we're on the daily 10 monkey bars right here, so you can understand what is a single print. Go back from here, put style, come here, we're going to go monkey bars. You can see the 30-minute, this is considered single print. I'm going to show you how to look at it. if I zoom in this area, when we came back on Wednesday, we rallied out of this area, and I wanted to show you this area from here to here. You can see the single prints from the breakout. This is a single print. If we come back and we end up losing that single print, then the sentiment changes. If there's going to be continuation, I am paying attention to the bottom of the Wednesday candle, if it's going to hold. If not, we have to come back to the value area high and the point of control, which is a virgin control point, and the time spent. If I take the high and low here, the time spent was lower. Usually liquidation breaks strengthens the market. We had the push down and the big rally up. We consolidated in here. We had a higher high. Then on Wednesday, on Thursday, we looked below and rallied back up, so it gave it more strength. And we had an inside day on Friday. I know it's a Friday, Good Friday. We don't trade in the U.S. market. It was closed, and you can see the session because of the report that came out. It gave us a little push back down. So we have to pay attention if there's going to be continuation down in the market or not in the coming week on Monday. Let's go back here in the style. For monkey bars, go back to standard. You can see the daily charts on MNQ. And last but not least, I will do IWM and show you the distance on it, or how I look at it. So in the IWM, I showed you this idea. If we are going to end up on the IWM clearing the 557 to 558, the momentum shifts up. If we end up losing the 44 and the 43 area, then we have to pay attention if the sentiment changes back to the downside. I hope this video was very helpful. If you have any question, once again, check us out at solstice.xlatrai, and take care. Over and out, and happy Easter to all.